Hello everyone, welcome back to my YouTube channel. In the last class, we studied about how to pass journal entries under Bill of Exchange, right? So in today's class, we are going to solve a practical problem under Bill of Exchange. So before watching this class, please watch my previous class, that is journal entries under Bill of Exchange, and then proceed with this one. So let's start. First, Rohan sold goods to Vinay on credit for rupees 45,000 on July 1st, 2025. Rohan sold the goods means under bill of exchange the drawer will come and drawee will come. Drawer means who makes the bill or who sold the goods. So in this case Rohan, he is the drawer, right? And next sold to Vinay, who pays the bill or who accepts the bill. So Vinay becomes the drawee. So Rohan is the drawer and Vinay is the drawee. So Rohan sold goods to Vinay on credit for rupees 45,000 on July 1st, 2025. Clear? To settle the amount, Rohan drew a bill for 3 months. So which Vinay accepted. So to settle the amount, the period given by Rohan is 3 months. So the bill that is accepted by whom? Accepted by Vinay. Now record journal entries in the books of Rohan under the following situations. So what are the situations? When the bill is retained till maturity and Vinay pays on due date. Vinay pays the bill on due date. That is the first situation. And second situation is when the bill is discounted with bank at 10% per annum. So on July 1st, 2025. Means here Rohan means the drawer. He needs the amount immediately. On July 1st, 2025 he sold the goods. On that date only he needs the amount. That is the second situation. And third situation is the bill is endorsed to supplier Arjun. Now the bill that is endorsed to supplier Arjun. Rohan, he endorsed the bill to supplier Arjun. Now Vinay has to pay the amount to the holder of the bill. In this case Arjun is the holder of the bill, so he has to pay the amount to the Arjun only. Clear? And fourth situation is the bill is sent to bank for collection and bank advice is received. So this is not endorsement and this is not discounting. Clear? Just Rohan sent the bill to bank for collection. That's it. Clear? Now let's solve the problem. So here drawer is the Rohan who makes the bill and Vinay, he is the means who pays the amount, drawee or who accepts the bill. Clear? So our first situation is when the bill is retained till maturity and Vinay pays on due date. Vinay pays on due date. So you have to write down books of Rohan means the drawer. This is the format of journal entries. Journal, that is date, particulars, LF, debit and credit. Clear? So first entry for what? First entry for when goods sold on credit. When goods sold on credit. So what is the journal entry? Vinay account debtor to sales account. Vinay account debtor to sales account. Means debit the receiver. See here, Rohan sold goods to Vinay. Vinay is the receiver, right? To sales account, to sales means that is the nominal account. Credit all incomes and gains. This is in the books of Rohan means drawer. Clear? So first entry for when goods sold on credit. The journal entry is Vinay account debtor to sales account. That is rupees 45,000 being goods sold to Vinay on credit. Clear? Now what is the journal entry? In the books of Drawee means in the books of Vinay, right? Rohan sold goods to Vinay. In the books of Drawee, the journal entry is for purchase. Vinay is the purchaser of goods, right? Rohan, he sold the goods and Vinay, he is the purchaser of goods. Means in the books of Vinay, the journal entry is on July 1st, 2025, purchases account debtor to Rohan account. Purchases account debit all expenses and losses and to Rohan account. To Rohan account. credit the giver. Who is the giver? Rohan. Rohan sold goods, right? So we need to credit Rohan's account. So purchases account debtor to Rohan account, being goods purchased on credit, that is rupees 45,000. This is in the books of Drawee, that is Vinay. Clear? Now, what is the second journal entry? Now, see here. To settle the amount, Rohan drew a bill for 3 months, which Vinay accepted. So, the second journal entry is when the bill is drawn and accepted. The bill is drawn and accepted. So, first in the books of drawer means Rohan bills receivable account debtor to Vinay account. Debit what comes in bills receivable means Vinay he accepts the bill and give it back to Rohan. So bills receivable what comes in bills receivable account debtor to Vinay account. Who has given the bill? Who accepts the bill and give it back to Rohan? Vinay. So credit it to Vinay account. Credit the giver. Clear? Being bill of exchange drawn on Vinay accepted, that is rupees 45,000. That is also on July 1st, 2025. Clear? Now what is the journal entry in the books of Drawee? See, Rohan account debit to bills payable account. Rohan account debit the receiver. Rohan he is going to receive the bill, that is accepted and give it back by Vinay, right? Rohan account debit to bills payable account, credit the giver, being bill accepted in settlement of Rohan's account, that is rupees 45,000. Clear? Now next third entry. So third entry will come for the bill is retained till maturity and Vinay pays on due date. Vinay pays the amount on due date. So the journal entry for that, bank account debtor to bills receivable account. Vinay pays on due date means here Vinay pays the full amount written on the bill on or before the due date to Rohan, who is the drawer in our case. Clear? So the entries when bank account debtor to bills receivable account, that is the journal entry. But when he has to pay for that, see, when the bill is retained till maturity and Vinay pays on due date. So what is our due date or maturity date? How do we have to calculate? So maturity date, it means what? Due date plus 3 days of grace. Right? So for that, here we have to mention the dates also very carefully. See, on July 1st, 2025, Rohan sold the goods to Vinay. On that date, Rohan he draws the bill and give accepted by Vinay and give it back to Rohan. That is also on July 1st, 2025. Now next entry, that is for the payment of bill on due date. So the date it becomes to October 4th, 2025. How we have to find out this date? See here, maturity date means what? In the last class we have already discussed about maturity date, right? Maturity date means due date plus 3 days of grace. Maturity date equals to due date plus 3 days of grace. Due date, it means what here? See here, to settle the amount, Rohan drew a bill for 3 months. Means Rohan, he has given 3 months of time to settle the amount to Vinay. So 3 months when Rohan sold the goods on July 1st. Right? So from August, calculate July, after that August, right? August, September, October. 3 months. Clear? So 1st October 2025. August, September, October. That is the due date. And for that we have to add 3 days of grace. That is plus 3 days of grace means 1st plus 1 plus 3. That is 4th October 2025. That is the maturity date. So our maturity date is 4th October 2025. Clear? See, in the previous classes we have already discussed about maturity of bill, right? So if the maturity date that falls on holiday, what we have to do? If the maturity date that is a public holiday, the payment is to be made on the preceding working day. Clear? And if the government suddenly declares an emergency holiday, then the bill is payable on the next working day. If there is public holiday, the payment is made on the preceding working day. Clear? If, for example, 15th August is Independence Day, that is the public holiday. So, the payment should be made on 14th August. But if the government that suddenly declares the emergency holiday and the bill is payable on the next working day. Clear? So that is about maturity date. So our maturity date in our case is 4th October 2025. So any entry that records maturity, collection or dishonor, that will be dated on 4th October 2025. So this calculation of finding of maturity date, that is very important, because in journal entries we have to write down the date correctly. Clear? So write down on October 4, 2025, bank account debtor to bills receivable account. Cash or bank account means debit what comes in, and bills receivable, credit what goes out, that is rupees 45,000. So in the books of Drawee, so the journal entry is on October 4, 2025, bills payable account debtor to bank account, that is in the books of Vinay. Bills payable account debtor to bank account means the liability is cancelled and cash goes out to make the payment. Cash goes out to make the payment, being bill paid to Rohan on maturity. Clear? Till here it is clear, right? So this is the first situation, that is the bill is retained till maturity and Vinay pays on due date. Now second situation is the bill is discounted with bank at 10% on July 1st, 2025. Clear? The bill is now discounted. So discounted, it means what? Bank gives the bill amount after deducting some interest or changes, that is called as discount. It means when the drawer discounts the bill, he needs the amount immediately. If Rohan, in our case, Rohan is the drawer, right? If he needs the amount immediately, he will discounts the bill with bank. So the bank gives him the bill amount after deducting some interest. So in our case, the interest is charged by the bank is 10% per annum. Means the bank that will not give full amount of rupees 45,000. It will pay after deducting some interest. So that charges are called as discount. So in our case, on July 1st, 2025, Rohan sold the goods to Vinay. And the settlement period is 3 months. But Rohan needs the amount on July 1st only. So he discounted the bill with the bank. Clear? So the Rohan receives money early with discount. And after that, the bank that will collect the full amount from Vinay on the due date. Clear? Now let's solve how to calculate this discounted amount. See here, bill discounted with bank at 10% per annum. Here banks discount for the term only 3 months. And here ignore the grace days. You have to ignore the grace days here. Clear? So when calculating the discount, so discounts, how we will calculate? 45,000, that is our amount, and 10% that is charged by bank, that is, see, when the bill is discounted with bank at 10% and sold the goods amounting to rupees 45,000 into 10%, and what I said, the time limit to pay the amount is 3 months. Right? But Rohan wants it July 1st itself. July 1st itself he needs the amount. So he needs the amount before 3 months. Before 3 months. Right? So 3 divided by 12. 3 months. Clear? The bank charges a 10% per annum. Clear? So 3 divided by 12 means Rohan needs the amount before 3 months. So 3 divided by 12. So the amount or a discount or interest charges is that is rupees 1125. 1125. Clear? This is the discounted amount. Clear? So let's now see the journal entries. See here. So here first journal and two journal entries are same. That is the goods sold to Vinay on credit. Vinay's account debtor to sales account. And next one, Rohan draws the bill and accepted by Vinay and gives it back to the Rohan. Bills receivable account debtor to Vinay account. But here don't write October 4th, the date of maturity. Why? Because on July 1st only Rohan is going to receive the amount from the bank. He discounted the bill with the bank. So be very careful about the dates. Clear? So the journal entry for discounting is bank account debit, debit what comes in, or cash account, discount account debtor, debit all expenses and losses because discount it is an expense, right? And two bills receivable account, credit what goes out, bill handed over to the bank, right? So our discount account how much? 1125. Here we have calculated 1125. And to bills receivable account how much? 45,000. Now Rohan he is going to receive only rupees 43,875. For 43,875. Clear? Bank account debtor, discount account debtor to bills receivable account, being bill discounted with bank at 10% per annum for 3 months. So remember, whenever drawer discounts the bill with the bank, he will not get full amount from the bank. Clear? The bank gives him the bill amount after deducting some interest. In our case that is 1125 and he will get only 43,875 rupees, not 45,000. And the bank that will collect the full amount from Vinay on due date, means from the drawee on the due date. Clear? This is the journal entry in the books of Rohan. So now what is the journal entry in the books of Vinay? See here, bill discounted by Rohan with bank, Vinay pays the bank. Clear? So on here, but the date is 4th October because Vinay pays the amount on due date only. He is not involved in discounting process. Drawee, he is not involved in the discounting process. He is going to pay the amount to the bank on the due date only. So write down the due date 4th October 25. Bills payable account debtor to bank account. Clear? Means when Rohan discounts bill with the bank, it means he is taking cash from the banks before the due date. Clear? Vinay he is not involved in this discounting process. Clear? So for this entry on July 1st 2025, this is the journal entry in the books of Rohan and there is no journal entry in the books of Vinay. The journal entry it will come only on due date. That is on due date, that is on 4th October 25, bills payable account debit to bank account. Means cash goes out. This is on maturity. That is in the books of Vinay. Clear? So I hope this is clear to you all. So this is the second situation. That is the bill is discounted with bank at 10% per annum. Now our third situation is when the bill is endorsed to supplier Arjun. Means Rohan endorsed the bill to Arjun. Now Vinay he is going to pay the bill amount to Arjun only. Means holder of the bill, whoever is the holder of the bill. So Vinay pays the bill amount to Arjun, not Rohan, because Rohan endorsed to supplier Arjun. Clear? But again here Vinay is not involved in the endorsement process. So there is no journal entry in the case of Vinay. Only on maturity the journal entry will come under in the books of Vinay. Clear? So let's discuss about it. So the bill is endorsed to supplier Arjun. 1 minute. Yes. Bill endorsed to supplier Arjun. Here the Rohan uses the bill to pay someone else. Rohan uses the bill to pay Arjun. In our case, Arjun. Bill endorsed to supplier Arjun. Clear? So in the books of Rohan, what is the journal entry? So first two entries are same. That is Vinay account debtor to sales account for goods sold on credit, and for bill of exchange drawn and Vinay accepted. Second entry is bills receivable account debtor to Vinay account. And now third entry for endorsement. That is Arjun account debtor to bills receivable account. Arjun debit the receiver and to bills receivable. Credit what goes out means Rohan endorse the bill to Arjun. Credit what goes out, that is rupees 45,000 being bill endorsed to Arjun in full settlement of his account. So in the books of Vinay there is no entry because he is not involved in this process. Now only Rohan and Arjun are get affected. Clear? Now in the books of, 1 minute, in the books of Drawee, that is Vinay, that is on maturity 2025 October 4th on maturity. So the entry is, see, bill endorsed by Rohan to supplier Arjun. Vinay pays Arjun means the holder of the bill on maturity. On maturity only the journal entry will come under in the books of Drawee, that is Vinay. In the endorsement case, the journal entry, there is no journal entry in the books of Vinay because Vinay is not involved in the endorsement process. Clear? So again on due date means October 4th, the entry is bills payable account debtor to bank account 45,000 being bill paid to Arjun means holder of the bill, not Rohan. Clear? Be careful in the case of endorsement. Here Vinay is going to pay the bill to the holder. In our case, holder of the bill is Arjun. On maturity, bill endorsed by whom? Rohan. Clear? That's it. Now, last situation, our last situation is the bill is sent to bank for collection and bank advice is received. See here. Yes. Bill sent to bank for collection and bank advice is received. It means what? See, when Rohan means drawer keeps the bill with him means he does not endorse it and discount it. Clear? This is not discounting and this is not endorsement. Rohan sends to the bank for collection few days before maturity. See, for example, in our case 25th September. Our due date is October 4th. So, few days before maturity. So, the bank will collect the amount from Vinay on the due date. On the due date. Bank will collect the amount from Vinay on the due date only. Clear? On the due date and credit it to the Rohan's account, drawer's account. That is what bill is sent to bank for collection. Clear? Rohan keeps the bill with him and then sends to the bank for collection a few days before the maturity. And the bank will collect the amount from Vinay on the due date and credit it to the Rohan's account. Clear? That's it. This is not endorsement. This is not discounting. Clear? Now first two journal entries are same, that is Vinay account debtor to sales account goods sold on credit to Vinay, and second one is bill drawn and accepted, that is bills receivable account debtor to Vinay account, and third one is on, I said here the bill is sent to bank for collection on 25th September. So write down 25th September 2025. Clear? So bill sent for collection account debtor to bills receivable account means a temporary account, bill sent for collection account, that is need to be opened. Clear? And the bills receivable, it is now no longer with the Rohan. Clear? So the journal entry for bill sent to collection, bill sent for collection to bank is bill sent for collection account debtor to bills receivable account, that is rupees 45,000. And now next journal entry is on maturity, that is bank account debtor, bank balance increases debited, and the temporary account opened right on 25th September, that we need to close now. So credit it to bill sent for collection account, that is rupees 45,000, being bank advice received, bill collected and proceeds credited. Clear? And in the books of Vinay, what is the journal entry? Only on due date, again here, that is on 4th October. Bill sent to bank for collection by Rohan. Bank collects and Vinay pays bank on presentation. That is bills payable account debtor to bank account, being bill paid to bank on presentation. Clear? Bank account, bank balance will decrease. Vinay's bank balance will decrease. Cash goes out. Clear? This is the journal entries for bill sent to bank for collection and bank advice is received. So here 4 situations are clear, right? So first one is the bill is retained till maturity and Vinay pays on due date. And second one is the bill is discounted with bank at 10% per annum, means Rohan needs the amount on July 1st only. The period of settlement is 3 months, but he needs the amount on July 1st. So in the case of discounting, there is no journal entry in the books of Vinay, means Drawee, because he is not involved in discounting process and he is going to pay the amount on the due date only. That is, you need to remember. And again here the bill is endorsed to supplier Arjun. Again, the endorsement process, Vinay is not involved in the endorsement process. This is between Rohan and Arjun. Rohan and Arjun. Rohan endorsed the bill to supplier Arjun. But here in endorsement case, Vinay is not going to pay the bill amount to Rohan. He has to pay the amount to the holder of the bill. Clear? So in our case, Arjun is the holder of the bill. So the Vinay is going to pay the bill amount to Arjun. And third one is the bill is sent to bank for collection few days before maturity. And bank will collect the amount from Vinay on the due date. Clear? This is the 4th situation. So I hope this problem is clear to you all. If you have any doubts in this problem, please leave a comment. Thank you.